Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, with the price repeatedly bouncing back from support levels. The forecast price also suggests continued upward momentum, with prices expected to reach $106,000 over the next week. This positive outlook, coupled with the historical trend, indicates a strong potential for long-term capital appreciation. Therefore, the investment strategy would involve entering a long position at the current price of $104,000. The stop loss should be set at $94,552.42, which is the support price identified by the system. The target price should be $106,108.15, the resistance price, aiming to capitalize on the anticipated upward movement. This strategy allows for risk management while maximizing potential returns by aligning with the bullish market sentiment and historical price trends of Bitcoin. Based on the provided information for Bitcoin Cash, a cautious short-term investment strategy appears most suitable. The 2-week price change demonstrates a lack of consistent direction, with the forecast suggesting a slight downward trend over the next week. While the price remains above the support level of $421.40, the resistance at $446.70 indicates limited upward potential. Therefore, a short position with a conservative approach is recommended. The entry price should be set at $435, aligning with the forecasted price and providing a buffer above the support level. The stop loss should be placed at $441 to minimize potential losses if the price unexpectedly surges. The target price should be set at $418, aiming to capitalize on the anticipated downward movement while remaining mindful of the support level. This strategy allows for potential profit while mitigating risk in a market with uncertain direction. Based on the provided information for stacks, a short-term bearish investment strategy appears most suitable. The 2-week price change demonstrates a downward trend, and the 1-week forecast predicts further declines. While the support price sits at $1.227, the forecast suggests a potential drop to $1.25 or even lower. Considering these factors, a short position would allow us to capitalize on this anticipated decline. An ideal entry price for this strategy would be around $1.40, slightly above the current price, providing a buffer against sudden upward movements. The stop loss should be set at $1.453, the resistance price, to minimize potential losses if the price unexpectedly rises. The target price could be set at $1.28, aligning with the lower end of the forecast, allowing for a reasonable profit margin while mitigating the risk of chasing further downward movements. This short-term strategy aims to leverage the predicted price decline and capitalize on the potential for short-term gains. Ethereum shows a volatile price history with both upward and downward movements over the past 2 weeks. The forecast indicates a slightly bearish trend in the coming week, with prices hovering around $3,260. However, the support price at $3,194.16 suggests a potential floor for the price. Considering the short-term volatility and the forecast, a short-term trading strategy could be considered. Given the current price of around $3,280 and the forecast, a short position could be considered with an entry price around $3,270. A stop loss should be placed above the recent high of $3,470 to mitigate potential losses from an unexpected upward move. The target price could be set at $3,195, aiming to capture a portion of the potential downside movement towards the support level. This strategy would involve a short-term investment horizon, aiming to capitalize on the potential price dip within the next week. Based on the provided information about Ripple, a medium-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a recent upward trend, with the price fluctuating around the $3.10 mark. The forecast suggests continued upward momentum, with prices potentially reaching $3.32 in the coming weeks. This indicates a bullish outlook for Ripple in the short to medium term. Therefore, a long position is recommended. An optimal entry price would be around $3.15, aligning with the recent price action and allowing for potential upside. A stop loss should be placed at $3 to mitigate risk in case the price reverses direction. A target price of $3.30 would capitalize on the projected price increase and provide a healthy profit margin. This strategy balances the potential for growth with risk management, making it suitable for a medium-term investment horizon. Given the price trends and forecast for Binance Coin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price close to its forecast and near the support level. The resistance is at $685.69, indicating that there is limited room for upward movement in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For an aggressive short-term investment strategy, an entry price of $682 would be ideal, aligning with the forecasted price. The stop loss should be set at $688 to protect against any unexpected price recovery. The target price should be set at $675, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $679.80. Based on the provided price history and forecast for Stellar, a short-term investment strategy appears to be the most suitable approach. The recent price action shows a slight downward trend, with the forecast indicating further declines in the coming week. The current price sits near the resistance level, suggesting a potential for a pullback. Therefore, an aggressive short-term investment strategy would involve taking a short position on Stellar. A suitable entry price would be around $0.447, aligning with the current price near the resistance level. To manage risk, a stop-loss order should be placed at $0.455, slightly above the entry price and the first forecast price. The target price could be set at $0.427, aiming to capitalize on the potential price decline towards the support level. This strategy allows for a quick turnaround and aims to profit from the anticipated short-term downward movement in Stellar. Given the price trends and forecast for Toncoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price close to its forecast and near the support level of $4.819. The resistance is at $5.208, indicating that there is limited room for upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a conservative short-term investment strategy, an entry price of $5.15 would be ideal, aligning with the forecasted price. The stop loss should be set at $5.25 to protect against any unexpected price recovery. The target price should be set at $4.90, slightly above the support level, allowing you to take profits before the market hits major support at $4.819. Based on the provided data for Cardano, a cautious short-term investment strategy appears most suitable. While the forecast indicates a slight decline in price over the next week, the historical price data shows volatility and potential for short-term rebounds. The current price is near the support level, suggesting a potential for a bounce before the predicted decline. Therefore, a short position is recommended, aiming to capitalize on a potential price dip. An entry price of 99 cents could be considered, aligning with the current price and offering a margin for potential price fluctuations. The stop loss should be set at $1.01 to limit potential losses if the price unexpectedly rises. The target price should be set at 96 cents, capturing a modest profit if the forecast decline materializes. This strategy prioritizes risk management and aims to profit from short-term price fluctuations while acknowledging the inherent volatility of the cryptocurrency market. Given the price trends and forecast for Litecoin, a medium-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a gradual upward trajectory, with recent fluctuations around the $118 mark. The forecast predicts a continued upward movement, reaching $125 in the coming weeks. This suggests a positive outlook for Litecoin in the medium term. Therefore, a long position is recommended to capitalize on this potential price increase. An ideal entry price would be around $116, aligning with the recent price action and providing a margin of safety below the current market price. The stop loss should be set at $113 to protect against unexpected price drops, while the target price could be $123, aiming to capture a significant portion of the forecasted price increase. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses in the medium term. Based on the provided price information for SWAY coin, a cautious approach with a medium-term investment perspective appears most suitable. The historical price data reveals a volatile trend with both upward and downward fluctuations. While the recent price has dipped, the forecast suggests a continued downward trajectory in the coming week. The support price at $4.0892 indicates a potential floor for the price, while the resistance at $4.6501 suggests a ceiling for upward movement. Considering these factors, a short position is recommended to capitalize on the anticipated price decline. An entry price around $4.45, slightly above the current price, allows for a small buffer while aligning with the forecast. A stop loss at $4.55 would help mitigate potential losses if the price unexpectedly surges. The target price could be set at $4.10, aiming to capture a portion of the predicted decline. This strategy balances risk and reward, allowing for potential profit from the short-term downward trend while protecting against significant losses. Given the price trends and forecast for Aptos, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The forecast suggests Aptos could drop from its current price to as low as $7.62, while the support price sits at $7.55 and resistance at $8.69. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve an entry price of $8.36, aligning with the current price and the recent downward trend. The stop loss should be set at $8.53 to protect against any unexpected price recovery. The target price should be set at $7.75, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $7.55. Given the price trends and forecast for SAY, a short-term investment strategy is recommended. The historical prices show a clear downward trend, with the forecast indicating further declines. The current price is close to the support level of $0.3066, suggesting a potential bounce. However, the forecast suggests a continued downward movement, making a short position more suitable. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price of around $0.344. The stop loss should be set at $0.357, slightly above the recent high, to limit potential losses. The target price could be set at 29 cents, aligning with the forecasted low and allowing for a reasonable profit margin. This strategy aims to capitalize on the anticipated price decline while managing risk through a tight stop loss. Given the price trends and forecast for Ethereum Classic, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a fluctuating pattern with an overall upward bias. The forecast indicates a potential increase in price over the next week, suggesting continued positive momentum. However, the price is currently near its resistance level, indicating that a significant upward move might be met with some resistance. Therefore, a long position is advisable for a medium-term investment strategy. An entry price of $28.50 would allow you to buy in near the current price, but slightly below the resistance level. The stop loss should be set at $25.14, the support price, to protect against any unexpected price decline. The target price should be set at $29.11, the resistance level, allowing you to take profits if the price successfully breaks through this barrier. This strategy aims to capitalize on the potential for continued price appreciation in Ethereum Classic over the medium term while mitigating risk through a well-defined stop loss. Based on the provided Polygon price history and forecast, a short-term bearish strategy appears most suitable. The 2-week price change shows a downward trend, and the forecast predicts further declines. While the historical prices suggest some volatility, the overall direction is downwards. The support price of $0.3594 provides a potential floor for the price, while the resistance at $0.4748 acts as a ceiling, limiting upward potential. Given this context, an aggressive short-term investment strategy could involve opening a short position at the current market price, slightly below the forecast's first value of $0.437. The stop loss should be placed at $0.441, slightly above the recent historical high and the next forecast value, to minimize potential losses if the price unexpectedly rallies. The target price could be set at $0.416, aligning with a key forecast value and allowing for a decent profit margin while navigating the anticipated downward trend. This strategy capitalizes on the bearish momentum and aims to profit from the predicted price decline within a short time frame. Based on the provided price information for AEVO, a bearish investment strategy is recommended. The historical price data shows a clear downward trend over the past 2 weeks, and the forecast predicts further declines in the coming week. The prices are consistently falling, suggesting a lack of buying pressure and potential for further losses. Therefore, a short position is advisable to capitalize on this anticipated decline. An entry price of $0.291, which is slightly above the current price, allows for a buffer against immediate price fluctuations. A stop loss should be set at $0.301, the next resistance level, to limit potential losses if the price unexpectedly rises. The target price can be set at $0.268, which aligns with the forecast and represents a significant potential profit. This strategy aims to take advantage of the prevailing bearish momentum in AEVO and secure profits from the anticipated price decline. Based on the provided information for optimism, a short-term bearish strategy appears most suitable. The historical price data reveals a fluctuating trend, but the recent downward movement and the 1-week price forecast pointing towards further declines suggest a bearish sentiment. The forecast predicts prices dropping from the current level to $1.69, close to the support price of $1.69. Therefore, a short position on optimism is recommended. An ideal entry price would be $1.73, slightly above the current price, allowing for a small margin of safety. The stop-loss order should be placed at $1.757, the resistance price, to limit potential losses if the price unexpectedly rises. The target price could be set at $1.69, aligning with the forecast's lowest price point. This strategy capitalizes on the anticipated price decline while managing risk through a well-defined stop-loss order. Based on the provided price information for STRK, a bearish investment strategy appears most suitable. The historical price data reveals a downward trend, with the price dropping consistently over the past few weeks. Furthermore, the forecast price indicates continued decline, suggesting a lack of upward momentum in the near future. The support price at $0.3346 acts as a potential floor, while the resistance price at $0.3917 suggests a significant hurdle for any potential price increase. Therefore, an aggressive short-term investment strategy would involve taking a short position on STRK. A suitable entry price would be around $0.365, aligning with the forecast price and allowing for a potential profit margin. The stop-loss should be set slightly above the entry price at $0.372 to mitigate risk in case of an unexpected price surge. The target price could be set at $0.335, aiming to capture a portion of the anticipated price decline towards the support level. Given the provided historical price data and the forecast for Solana, a medium-term investment strategy appears most suitable. The price has shown a strong upward trend over the past 2 weeks, reaching a high of $261 before experiencing a slight pullback. The forecast suggests continued upward momentum, with prices projected to reach around $260 within the next week. This indicates a bullish outlook for Solana in the short to medium term. Therefore, an investment strategy involving a long position is recommended. The entry price should be set at $253, slightly below the current market price, allowing for a margin of safety. The stop loss should be placed at $248, slightly below the recent support level, to mitigate potential downside risk. The target price should be set at $260, aligning with the forecast and aiming to capitalize on the anticipated price increase. This strategy balances risk and reward, allowing for potential profits while minimizing potential losses. Based on the provided price data for Jupiter, the historical price shows a fluctuating pattern with both upward and downward movements. The forecast suggests a downward trend over the next week, with prices potentially falling from the current level. Considering the support price of $0.7961, a short-term investment strategy could involve entering a short position at a price slightly above the current market price, around $0.815, anticipating a decline towards the support level. A stop-loss order should be placed at 84 cents to limit potential losses if the price unexpectedly rises. The target price could be set at $0.785, aiming to capture a profit before the price reaches the support level. This strategy capitalizes on the anticipated downward trend and aims to generate short-term returns by profiting from the price decline. Based on the provided historical price data and forecast for render, a short-term bearish strategy appears to be the most suitable approach. The 2-week price change shows a downward trend, and the forecast indicates further declines. The historical price data suggests that render is currently trading near its resistance level of $6.978, indicating potential for a price pullback. The forecast predicts prices will fall to around $6.64 in the coming week, presenting an opportunity to profit from this anticipated decline. Therefore, a short position on render is recommended. An aggressive entry price would be $6.95, allowing you to capitalize on any immediate price dip. A stop loss should be placed at $7.10 to protect against unexpected upward movement. The target price should be set at $6.50, aiming to capture a significant portion of the predicted price decline while avoiding potential overselling. This strategy aligns with the short-term bearish outlook and allows for potential profit while managing risk effectively. Given the provided price history and forecast for Solana name service, a cautious short-term investment strategy appears most suitable. The recent price history shows some volatility but generally lacks a clear upward or downward trend. The forecast indicates a potential decline in the coming week, with prices possibly dropping below the current level. Therefore, a short position would be advisable to capitalize on this potential decline. An entry price around $0.215 could be considered, aligning with the recent price action and the forecast's downward trajectory. A stop loss should be set slightly above the entry price, around 22 cents, to limit potential losses if the price unexpectedly moves higher. The target price could be set at $0.195, aiming to capture a portion of the predicted decline. This strategy prioritizes risk management by setting a stop loss while aiming for a reasonable profit potential based on the forecast. Given the price trends and forecast for Doge-Coin, a short-term investment strategy focusing on a long position appears suitable. The historical prices demonstrate a slight upward trend, and the forecast suggests continued growth, albeit at a moderate pace. While the support price at $0.34888 offers a safety net, the resistance at $0.4081 indicates potential for further upside. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current market price around $0.353. A stop-loss order should be placed at $0.34888, slightly below the support price, to limit potential losses. The target price for this trade would be set at $0.4081, aiming to capture the potential upside movement towards the resistance level. This strategy capitalizes on the positive short-term outlook for Doge-Coin while managing risk through a well-defined stop-loss order. Given the price trends and forecast for PEPE, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The forecast suggests PEPE could drop from its current levels to as low as $0.0000137, while the support price sits at $0.0000089 and resistance at $0.0000169. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. For a conservative short-term investment strategy, an entry price of $0.0000158 would be ideal, aligning with the current price and the forecasted price. The stop loss should be set at $0.0000160 to protect against any unexpected price recovery. The target price should be set at $0.0000148, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.0000089. Remember that this is just a suggestion, and you should always conduct your own research and consider your risk tolerance before making any investment decisions. Based on the provided price information for SHIB, a cautious short-term investment strategy appears most suitable. The recent price history exhibits volatility, with fluctuations both upwards and downwards. The forecast suggests a continued downward trend over the next week, reaching prices potentially lower than the current levels. The support price at $0.0000192 provides a potential floor for the price, while the resistance at $0.0000212 suggests limited upward potential. Given this outlook, a short position on SHIB is recommended. An entry price around $0.0000206, aligning with the initial forecast price, would be appropriate. To manage risk, a stop-loss order should be placed at $0.0000212, the resistance level. This would limit potential losses if the price unexpectedly surges. The target price could be set at $0.0000192, the support level, aiming to capture potential profits from the anticipated downward movement. This strategy prioritizes risk management while capitalizing on the short-term bearish forecast for SHIB. Based on the provided price history and forecast for DOG-COIN, a cautious short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with a recent downward movement. The forecast predicts continued declines in the coming week, suggesting a bearish outlook for DOG-COIN in the short term. Considering this trend, a short position is recommended to capitalize on the anticipated price decrease. An entry price of $1.45 aligns with the current price and the downward trajectory indicated by the forecast. To manage risk, a stop-loss order should be placed at $1.50, slightly above the entry price, to limit potential losses if the price unexpectedly rises. The target price for this short position could be set at $1.30, aiming to profit from the forecasted decline. This strategy prioritizes risk management while seeking to capitalize on the short-term bearish outlook for DOG-COIN. Given the price trends and forecast for Doge-Coin, a conservative investment strategy would focus on a short-term approach. The historical prices show a consistent downward trend, with the current price near the lowest point in the recent history. The forecast suggests Doge-Coin could drop further, reaching as low as $0.00445. This indicates a bearish outlook in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease. For an aggressive short-term investment strategy, an entry price of $0.0053 would be ideal, aligning with the current price and the forecasted price. The stop loss should be set at $0.0055 to protect against any unexpected price recovery. The target price should be set at $0.0046, slightly above the forecasted lowest price, allowing you to take profits before the market hits a potential support level. This strategy aims to capitalize on the anticipated decline in prices, while mitigating risk through a well-defined stop-loss order. Given the price trends and forecast for near protocol, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent consolidation phase, with the price fluctuating around the $5 mark. The forecast indicates a slight downward trend in the coming week, with prices potentially dropping towards the support level of $4.906. This suggests a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated price decline. An entry price of $5.08, slightly above the current price, allows for a small margin of safety. The stop loss should be set at $5.17 to protect against any unexpected price recovery. The target price should be set at $4.85, slightly above the support level, allowing you to take profits before the market hits major support. This strategy aims to capture a small profit from the expected price movement in the short term. Given the historical price data and the provided forecast for internet computer, a short-term bearish investment strategy seems most suitable. The 2-week price history shows a fluctuating trend with a slight downward bias, and the forecast predicts further price declines over the next week. This suggests a potential opportunity to profit from a short position. An entry price of $9.26, aligning with the recent price dip, would be a good starting point. The stop loss should be placed at $9.79, the resistance level, to protect against any unexpected upward price movement. The target price could be set at $8.86, reflecting the lowest point in the forecast, allowing for potential profit before the price potentially rebounds. This short-term strategy capitalizes on the anticipated price decline while minimizing risk. Based on the provided information for Injective, a short-term investment strategy appears to be the most prudent approach. The historical price data reveals a fluctuating trend, hovering around the $20 level. However, the forecast predicts a downward trajectory, with prices potentially dropping to $19 within the next week. This bearish outlook, coupled with the proximity of the current price to the resistance level of $23.05, suggests a higher probability of a price decline in the short term. Therefore, a short position on Injective is recommended. An entry price of $21.50, slightly above the current price, allows for some buffer while still capturing potential downward movement. A stop-loss order should be placed at $22.50 to limit potential losses if the price unexpectedly surges. The target price is set at $19.50, aiming to profit from the anticipated decline. This strategy capitalizes on the short-term bearish sentiment and the forecast's prediction of lower prices in the coming week. Given the provided price history and forecast for BTC, a cautious approach is recommended. The 2-week price change reveals a volatile trend with both upward and downward movements. The forecast indicates a potential decline in the coming week, suggesting a bearish short-term outlook. Considering the support price at $298.50 and the resistance price at $441.1, entering a short position appears to be a viable strategy. To execute this strategy, we can set an entry price at $410, a stop loss at $430, and a target price at $380. This entry price aligns with the recent price dip and allows for a potential profit if the forecast holds true. The stop loss is strategically placed above the entry price to limit potential losses. The target price is set below the support level, aiming to capture a significant portion of the anticipated price decline. Based on the provided price history and forecast for THETA network, a cautious short-term investment strategy appears most suitable. The 2-week price change shows a slight downward trend, and the forecast predicts further declines. While the current price is close to the support level of $1.965, the historical data suggests potential for further downward movement. Therefore, an investment strategy involving a short position is recommended. A conservative entry price of $2.04 could be considered, aligning with the current price and providing a small buffer above the support level. The stop loss should be set at $2.12, slightly above the recent highs, to limit potential losses if the price unexpectedly rebounds. The target price could be set at $1.96, aiming to capture a portion of the anticipated decline. This strategy prioritizes risk management and capital preservation, aiming for modest profits in a potentially volatile market. Based on the provided historical price data and the one-week forecast for WorldCoin, a cautious medium-term investment strategy appears to be the most suitable approach. While the historical prices exhibit some volatility, the forecast suggests a slight upward trend. The current price is relatively close to the support price, indicating a potential for consolidation or a modest upward move. Considering this outlook, a long position would be recommended. A reasonable entry price could be around $2.15, aligning with the recent price action and providing a buffer above the support level. The stop loss should be set at $2.05 to protect against unexpected price drops. The target price could be set at $2.30, aiming to capitalize on the potential upward movement suggested by the forecast. This strategy allows for a moderate risk-reward ratio and aligns with the potential for a gradual price increase in the medium term. Given the provided price history and forecast for Hooked Protocol, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals a downward trend, with recent prices significantly below their highs. The forecast further indicates a continuation of this downtrend in the coming weeks. Therefore, a short position on Hooked Protocol is recommended. An entry price of $0.300 could be considered, aligning with the current price and the forecasted decline. A stop-loss order should be placed at $0.320 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.280, anticipating a moderate decline based on the forecast. This strategy aims to capitalize on the anticipated price decrease while managing risk through a well-defined stop-loss. Artificial Superintelligence Alliance's recent price history shows volatility with both upward and downward movements. The forecast suggests a continued downward trend over the next week, reaching as low as $1.19. The support price is at $1.159, and the resistance is at $1.245. Given this information, a short-term bearish strategy appears to be the most suitable approach. An aggressive short-term investment strategy would involve entering a short position at the current price of $1.28. The stop loss should be placed at $1.32 to limit potential losses if the price unexpectedly rallies. The target price could be set at $1.19, aligning with the lowest forecast price, allowing for a potential profit. This strategy capitalizes on the anticipated downward price movement and aims to generate quick returns within the short term. Polkadot exhibits a downward trend over the past 2 weeks, with the forecast indicating further declines. The forecast suggests Polkadot could drop from its current price to as low as $5.96 in the coming week. The support price sits at $6.165 and resistance at $6.587. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. Given this outlook, an aggressive short-term investment strategy would involve entering a short position at $6.44, close to the current price but above the support level. The stop loss should be set at $6.587, the resistance level, to protect against any unexpected price surges. The target price should be set at $6.165, slightly below the support level, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the anticipated price decline while mitigating risk with a well-defined stop loss. Given the price trends and forecast for Filecoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight upward trend, but the forecast indicates a potential decline in the coming week. The support price sits at $4.93, suggesting a potential floor for the price, while the resistance is at $5.27, indicating a ceiling for potential upward movement. Considering this outlook, a short position is advisable to capitalize on the anticipated price decline. An entry price of $5.08, slightly above the current price, allows for a buffer against immediate fluctuations. The stop loss should be set at $5.12 to protect against any unexpected price surges. The target price should be set at $4.93, aligning with the support level, allowing you to secure profits before the price potentially rebounds. This strategy aims to capture a limited but achievable profit within a short time frame, minimizing risk while aligning with the current market signals. Based on the provided historical price data and the forecast for conflux, a cautious approach with a medium-term investment perspective appears most suitable. While the historical prices show some volatility, they generally trend downwards. The forecast indicates a continuation of this downward trend in the coming week. Given this, a short position would be the most logical choice to capitalize on the anticipated price decline. An entry price of $0.151 would allow you to enter the short position near the current market price, aligning with the potential for further downward movement. The stop loss should be set at $0.1568, the resistance price, to minimize potential losses if the price unexpectedly rises. The target price should be set at 14 cents, the support price, aiming to capture a significant portion of the anticipated price decline. This strategy allows you to profit from the bearish outlook while managing risk effectively. Based on the provided price history and forecast for Ethereum name service, a medium-term investment strategy appears most suitable. The price history shows a fluctuating trend with a slight upward bias, indicating potential for further growth. The forecast suggests a consolidation period around the $33 price level in the coming week. This consolidation could present an opportunity to enter a long position. An ideal entry point would be around $33, aligning with the support price and the forecast. The stop loss should be set slightly below the support level at $32.50 to minimize potential losses. The target price could be set at $35, considering the recent price highs and the resistance level of $43.47. This strategy allows for capitalizing on the potential upside while managing risk through a defined stop loss. Holding the position for a few weeks could allow for a moderate return as the price potentially moves towards the resistance level. Based on the provided data for Avalanche, the strategy suggests a short-term bearish outlook. The historical price data shows a recent decline, and the forecast indicates further price drops in the coming week. The price is currently hovering near the support level, suggesting a potential for a further downward move. Therefore, a short position on Avalanche is recommended for a short-term investment strategy. The entry price should be around $36, aligning with the current price and the potential for a downward move. The stop loss should be set at $36.33, slightly above the current price, to limit potential losses if the price unexpectedly rises. The target price should be set at $35.19, the support level, aiming to capture the anticipated price decline. This strategy capitalizes on the bearish outlook and aims to profit from the potential price drop towards the support level. Based on the provided Vecane price data, a short-term investment strategy appears promising. The historical price shows fluctuations, but the recent downward trend coupled with the forecast indicating further declines suggests a bearish outlook. The forecast prices range from $0.0478 to $0.0488, indicating a potential for a slight increase, but the overall trend remains downward. Therefore, a short position on Vecane is recommended for a short-term investment. An entry price of $0.0476, near the current price and above the support price, allows for a relatively low-risk entry point. The stop loss should be set at $0.0492, slightly above the recent high, to limit potential losses if the price unexpectedly moves upward. The target price can be set at $0.046887, the support price, aiming to capitalize on the anticipated decline. This strategy aims to profit from the short-term bearish momentum while minimizing risk. Based on the provided PENDLE price history, forecast, and support/resistance levels, an investment strategy focusing on a short-term position appears most suitable. The 2-week price history demonstrates volatility, with recent fluctuations suggesting a potential for continued price swings in the short term. The forecast indicates a downward trend, with prices potentially falling below the current level. This bearish outlook aligns with the historical price movement and suggests a short position could be profitable. An entry price around $3.65, slightly above the current price, would allow for a small margin of safety while still capitalizing on the potential downward movement. A stop loss at $3.75 would protect against unexpected upward price surges, while a target price of $3.40, aligned with the forecast's lowest predicted price, would aim to secure profits before the potential market dip. This strategy emphasizes capitalizing on short-term price fluctuations and managing risk through a well-defined stop loss. Based on the provided The Sandbox price information, a cautious investment strategy with a short to medium-term perspective appears most suitable. The historical price data reveals a recent decline, with the price hovering near the support level of $0.5463. The forecast suggests further price dips in the coming weeks, reaching as low as $0.522. This indicates a potential for continued downward pressure on the asset. Given this outlook, a short position with a stop loss at 57 cents, slightly above the current price, would be prudent. This strategy aims to capitalize on the anticipated price decline towards the forecast lows. The target price should be set around $0.525, offering a reasonable profit margin while avoiding overexposure to potential market fluctuations. This approach balances risk management with the opportunity to profit from the foreseen price movement in the sandbox. Given the price trends and forecast for Decentraland, a cautious investment strategy would focus on a short-term approach. The historical prices show some volatility, with the current price hovering near the support level of $0.4556. The forecast suggests a potential decline in the coming weeks, with prices potentially dropping below the current level. Therefore, a short position is advisable to capitalize on the anticipated price decrease. An entry price of $0.476, slightly above the current price, would allow for some room for price fluctuation before entering the short position. The stop loss should be set at $0.498, protecting against any unexpected upward movement. The target price should be set at $0.456, slightly above the support level, allowing for potential profits before the market potentially hits major support. This strategy allows for potential profits from the anticipated price decline while mitigating risk through a well-defined stop loss. Given the price trends and forecast for ENG coin, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests ENG coin could drop from its current price to as low as $0.155, while the support price sits at $0.1386 and resistance at $0.209. This indicates a bearish outlook in the short term. For a cautious short-term investment strategy, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.196 aligns with the current price and the forecast, setting a stop loss at $0.209 to protect against unexpected price recovery. The target price should be set at $0.155, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.1386. This strategy aims to minimize risk while capturing potential gains from the expected downward price movement. Based on the provided information about Uniswap, a cautious investment strategy focusing on the short term seems most appropriate. The 2-week price history reveals a fluctuating trend, hovering around the $12 to $14 price range. However, the 1-week forecast indicates a potential decline towards $11, suggesting a bearish short-term outlook. Considering this, a short position would be advisable. For an entry price, we can target $13, aligning with the current price and the upper bound of the recent price range. The stop loss should be set at $13.50 to protect against any unexpected upward movement. The target price can be set at $11.50, capturing potential downside momentum while allowing for a reasonable profit margin. This strategy aims to capitalize on the anticipated short-term price decline while managing risk through a well-defined stop loss. Given the price trends and forecast for Chainlink, a medium-term investment strategy appears to be the most suitable. The historical prices show a recent period of consolidation with a slight upward trend. The forecast indicates a period of stability around $24, suggesting a lack of significant upward or downward momentum in the near term. The support price at $21.78 indicates a potential floor for the price, while the resistance at $25.50 suggests an upper limit for potential gains. Therefore, a long position on Chainlink is recommended for a medium-term investment strategy. The entry price should be around $22.50, below the current price but above the support level, allowing for some downside protection. The stop loss should be set at $21.80, just below the support price, to limit potential losses. The target price should be set at $25, aiming to capture a significant portion of the potential upside before encountering resistance. This strategy allows for a balanced approach, taking advantage of the potential for price appreciation while mitigating risk through a well-defined stop loss. Based on the provided information for Aave, a medium-term investment strategy appears most suitable. The historical price data reveals a volatile trend with periods of both growth and decline. While the forecast suggests a slight upward movement in the coming week, the resistance price is relatively close, indicating potential for consolidation or even a slight pullback. Therefore, an entry price of $325 would be a good starting point, allowing you to buy in before a potential price increase towards the resistance level. A stop loss of $315 would help protect against unexpected downward movements, while a target price of $350 would capitalize on the potential for a medium-term price increase. This strategy balances the potential for profit with risk management, aiming to capitalize on the expected upward momentum while mitigating losses in case of a market correction. Given the price trends and forecast for EOS, a medium-term investment strategy appears most suitable. While the 2-week price change shows some volatility, the forecast indicates a gradual decline in the coming week. However, the support price at $0.7713 suggests a potential floor for the price, preventing a significant drop. Therefore, a short position is advisable for a medium-term investment strategy. An entry price of $0.806, aligning with the recent price action, would be a suitable starting point. The stop loss should be set at $0.814, slightly above the entry price, to minimize potential losses if the price unexpectedly moves upwards. The target price should be set at $0.7713, the support price, aiming to capitalize on the anticipated price decline. This strategy allows for potential profits while mitigating risk by setting a clear stop-loss level. Based on the provided price information for Tron, a short-term investment strategy appears most suitable. The historical prices show a recent upward trend, with the current price hovering near the support level of $0.2444. The forecast suggests a continuation of this upward momentum, with prices potentially reaching $0.255 over the next week. This indicates a bullish outlook in the short term. Therefore, a long position is recommended to capitalize on this potential price increase. An ideal entry price would be around $0.247, aligning with the forecast. A stop loss should be set at $0.2444, slightly below the support level, to mitigate risk in case of an unexpected price reversal. The target price could be set at $0.253, allowing for a reasonable profit margin before reaching the resistance level of $0.2594. This strategy aims to take advantage of the short-term bullish momentum in Tron while managing risk effectively. Suncoin's recent price history demonstrates a downward trend, with the forecast suggesting further declines. The price has been hovering around the support price of $0.02106, indicating potential for further drops. The current price is also below the resistance level of $0.0242, suggesting limited upside potential in the near term. Based on this analysis, a short-term bearish strategy appears to be more suitable for Suncoin. Therefore, an aggressive investment strategy would involve taking a short position in Suncoin. A suitable entry price would be $0.0223, aligning with the recent price action and the forecast. The stop loss should be set at $0.0232, slightly above the entry price, to protect against any unexpected upward movement. The target price could be set at $0.0210, aiming to capitalize on the potential price decline towards the support level. This strategy focuses on capitalizing on the anticipated short-term downward trend in Suncoin. Remember, trading cryptocurrencies involves significant risk, and this strategy should be implemented with caution and a thorough understanding of the market.